Most people take their first $1,000 and throw it into a savings account. They just hope for the best. But hope isn't a strategy. In today's economy, that money is actually losing value to inflation every single day. Here is the truth. You don't need a massive windfall to start building wealth. You just need a system. I've analyzed the most successful portfolio models used by institutional investors and stripped away the jargon to find what actually works for beginners. Today, I'm giving you 3 hidden blueprints to deploy your first $1,000. Whether you're terrified of risk, looking for steady growth, or want to go all in for maximum returns, I'm showing you the exact asset allocation to use. By the end of this video, you'll know exactly which funds to buy and how to set up your portfolio in under 10 minutes. Let's get your money working for you. Let's be real. You've got $1,000. Maybe it's from a side hustle, a tax refund, or you finally cut back on the mindless spending. Now you're stuck. You know you should invest it, but where? The safe move is to leave it in a savings account. But here's the cold truth. Your bank is lying to you. That tiny interest rate, it's a joke. While your money sits there, inflation is eating it alive. The cost of living goes up, but your $1,000 stays the same. In real terms, you're actually losing purchasing power every single day you wait. Then there's the other side, the fear. You're terrified of picking one wrong stock and watching that seed money vanish overnight. You see gurus on TikTok screaming about the next meme coin or a random AI penny stock. It feels like a gamble, not an investment. So you do nothing, you stay paralyzed. And while you hesitate, the people who actually understand allocation are building wealth in the background. You don't need a fortune to start, but you do need a plan. Because without a blueprint, that $1,000 is just a number on a screen, not a seed for your future. Here is the truth most gurus won't tell you. $1,000 isn't going to make you a millionaire overnight. But it is the most important $1,000 you'll ever invest. Why? Because you're not just investing money, you're investing in a system. The goal isn't a lucky win, it's portfolio allocation. Depending on your goals and how much risk you can stomach, there are 3 distinct blueprints you can follow. Let's dive into Blueprint 1, the Wealth Preserver. This is for you if the thought of your balance dropping by 10% makes you lose sleep. Your priority here is stability. First, put $500 into a high-yield savings account. This is your liquid safety net. Next, $300 goes into government bonds or a bond ETF. These are low-risk loans to the government. Finally, the remaining $200 goes into a broad S&P 500 index, fund via an online brokerage. You won't see explosive growth, but you're protecting your principal while beating inflation. Now let's move to Blueprint 2, the steady grower. This is the sweet spot for most Gen Z and millennials. You want growth, but you aren't reckless. 60% of your capital, $600, goes into a total stock market ETF. You now own a piece of almost every public company in the US. Then, we allocate $200 into dividend EPS. These companies pay you just for owning them. This is where your passive income loop begins. The final $200 goes into international markets. This ensures that if the US economy dips, your entire portfolio doesn't tank with it. Finally, we have Blueprint 3, the Wealth Accelerator. This is for the high-risk, high-reward crowd. You're young, you have time to recover from crashes, and you want maximum upside. 50% goes into a tech-heavy ETF like the NASDAQ 100. You're betting on the innovators. $300 goes into individual companies you've researched. Think AI, green energy, or biotech. And the last $200, this is your moonshot fund. Bitcoin, Ethereum, or high-growth microcaps. This is the most volatile path, but it's the only one with the potential for 10x returns. The key is to only use money you are 100% comfortable losing. Now, you can't just track these blueprints on a napkin. You need a reliable platform to execute. That's why I recommend using the brokerage in the description. It's designed for beginners, has zero commissions, and makes these allocations simple. Here is the reality. If you start with $1,000 today and consistently add to it, you aren't just saving money, you're buying your future freedom. Compound interest is a superpower. Over time, these blueprints turn a small seed into a passive income engine that grows while you sleep. But the biggest mistake you can make? Waiting. The best time to invest was 10 years ago. The second best time is right now. If this helped you clear the fog, hit that subscribe button and turn on notifications. Then, click the link below to open your account and pick your blueprint. Let's start building your wealth today.